Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein with your financial market review for this Tuesday, the 29th of August, 2017, about 5:10 p.m. Central Daylight Time, and I'm exhausted. I think I did more television interviews today than I've ever done in one day, and there could have been more. Just it takes a lot out of you. You got to get over to the studios, do whatever you got to do. It's not the easiest thing. In a nutshell, what we all saw yesterday, we saw some reversals also. So let's talk about it. We know about Hurricane Harvey. We know the damage. We know that eventually it will come to an end. We see America coming together, which is phenomenal, and we know we're going to get rebuilding done there. So already you see the financial stations talking, companies that may benefit as time goes on, getting contracts, how do you clean up the mess, the rebuilding of homes, what happens to the insurance on them. We're already seeing that Chuck Schumacher came out and he said maybe we have to do more extension of flood insurance. Maybe what this all leads to down the road is Congress stopping this nonsense bickering and getting something done. How's infrastructure? What do we keep hearing on different TV stations? Old levees, old dams. What does the president want? Well, maybe we can get both parties together for our benefit instead of their own. That would be a phenomenal thing, wouldn't it? In looking at taxes, that's going to come about now in terms of is anything going to happen? Debt ceiling, that's coming up. And this Friday, don't forget, you got the all-important non-farmers payroll. Then we get to today's action, which was set off by the missile that was fired over Japan into over one of their northern islands where the people heard air raid sirens and told to take shelter. If it were a nuclear event, where do you take shelter? There's no place to go on those islands. Very difficult. In the meantime, you saw the stock indices drop and come back up, and you'll see that on the charts. You saw the gold market, silver market take off and give back a chunk of that. You saw the euro currency get into the high 120.60 area, only to be down about a penny from there. So the first reactions, well, they were set back. We're looking at the crude starting to at least try to stop its decline, and that is because you still don't need the crude if you don't have the refineries going. Now, we're hearing some refineries are trying to start up. Others might have to shut down for maintenance going on. It's a real mixed story. The one thing we know is we're not seeing enough gasoline being produced, so the gasoline keeps jumping. You're hearing about that everywhere, and you're hearing it could go 25, 40, 50 cents a gallon. There's crazy numbers out there. I'm not talking gouging. I'm talking what the market's going to have to bear in order to get through this hump. But we're also seeing that the crude under 46 is trying to find some footing. Now, when we come to the Dow Jones Industrials on the weekly chart, I've got to tell you, you're at 21,864. You're not that far away from an all-time high. It's just not that much, 180 points, 200 points. You're just not that far away from it. That doesn't mean you can't break through this low and go back into a downtrend. It's very possible. When we go to a daily area chart of just closes, you've gone from 21,679 back up to 21,874, down a little tonight, 9 points. Yeah, you're looking at a market that came back today, didn't fall apart. And you see that on this chart. This is tonight's action. I'll get rid of that. You fell apart, got as low as 21,644, and then the market not only reversed, but it had an outside day up. That's important because now what you don't want to see if you think the market's putting in an attempt at bottoming here is to take out the lows of Tuesday, that low number of 21,644. If you do it within 2 sessions, in other words, Wednesday or Thursday, then this is a bull trap and it's all for naught. And I wish I could tell you how far down it's going, but it will have destroyed the attempt at forming a bottom here. Right now, we've got a market that's in a bit of consolidation between right through this range down to the 21,600 level. When we take a look at the swing line, you're still in a bear trend. You still have a pattern of lower highs, lower lows. Take out 21,893, which is what, 16 points away? Actually, 26 points away. 26 points away, and you get a pattern of a lower low and a higher high, negating the bit of a downtrend. The battleground should be the 18-day average of closes, which comes in at 21,869 right here. So likely what's been happening, this is what could be what's taking place right now, is the bears are taking their stand, trying to prevent the market from getting over that number to keep the chart pattern of lower highs, lower lows with the downside bias as the market is under the 18-day average of closes. If you want to see where the market stopped its decline, today's low was 21,644. The Bollinger Band comes in really at 21,640. So by 4 points it didn't hit it, got a big reversal to the upside, and in the process momentum is trying to go higher. You heard what I said. So you got a battle going on here. You got momentum trying to go up. You've got a downtrend, a market fighting at the 18-day average, probably getting sold, and if you get over 21,893, the bulls will say they won the day and wrestled the downtrend out of the bears' hands. On the S&P, it's a very, very similar chart. You've got lower highs, lower lows. The key to the market is, can you take out 24.5350? So what's probably happening is the bears are selling into the 18-day average of closes, stops over 24.5350. If they lose that, what happens is the bears no longer have the pattern of lower highs and lower lows. I wish I could tell you the bulls wrestled control. They haven't in either the chart before this, and we should come back to that, the Dow, and they won't have in the S&P. What they'll have done is stop the downtrend. You won't have the pattern of lower highs and lower lows. It would not surprise me you get all this crazy action also because Friday we have the non-farms payroll. What's that going to show? That'll be interesting. When we come to the NASDAQ, the daily bar, the key in the market was this high, in my opinion, not to take out 58.74. So what did the market do? The market got to 58.7550 today, negating that trend. So this is what it looks like when you give up that pattern. Now you got a lower low and a higher high, fighting its battle right at the 18-day average. It's about as neutral a chart as I know how to tell you. And the market that turned bullish was the Russell. And what the Russell's done is it's got a pattern of higher lows, higher highs. The market closed over the 18-day average of closes. Momentum is pointing up, and the chart stays this way unless you get back under 1366. First resistance, if the market can rally, is 1398. And if it's going to do nothing, it'll just probably hang around that 18-day average of closes. In the VIX, you had another big spike up, and the guys that played for that, again, got killed the way they did. This spike, that spike, I can go on and on. The volatility refuses to stay in the market. It keeps draining itself out. You are oversold. You are not trending. You have a lower low, a higher high, and how many days in a row are we trying to hit that 18-day average? I don't think you did it yesterday, but all these other days, and you're right back to hitting it again today. So you're playing right at that number, trying to figure out what to do. Maybe it's marking time for this Friday's non-farm payroll. I don't know if it'll even be an event. In the TLT, momentum is still bullish, trying to turn down. Do you notice how the red line is now turning back? Yesterday's number was 92.21 over on 90. Today it's slipping. That's not enough to say it's lost its way. If the market gets under 80, I'd be concerned. And if you take out this low right here, the 126, and we can give it to you, 126.73, yeah, I'd be concerned that the market's neutralizing itself going into Friday's non-farm payroll report. In the bonds, you got up again to the upper Bollinger Band, which is where I think on these rallies the pros are coming out. That doesn't mean they're not buying on these breaks back. In my charting course, I teach that, especially when you have an embedded reading, which you have here, or do you? As of the close, I want to teach you this. You had your embedded reading. That's Tuesday's close. Remember, I'm putting this out now. It's about, what, 5:15 or so now. You're losing that embedded reading. So this market is trying to give way on its upside momentum and flatten that out. I don't know if it'll close under it or not, but I wouldn't be surprised if the pros are definitely lightening up their positions up at that number. The same that I think they're doing in the notes when they get up to that upper Bollinger Band, even though you're in uptrends. In the dollar index, I would not be surprised that when we reopen the dollar index that it tries to get over that lower Bollinger Band. Now the big question is, in this breakout that we've had, is it going to have legs to it? The market got under a key number here, this zone right in this area here of the 9,200, slipped to 91.55, couldn't stay there, is oversold. The battle zone, probably somewhere between the Bollinger Band and the 18-day average. If you take out 93.37, it has to restructure itself. Barring that, I think the bears have control. And it's a flip-flop of that in the euro currency, which is overbought, in an uptrend, trying to get back underneath the upper Bollinger Band, as you can see, and widen out in the process. It's reading. Don't know if it's going to be able to do that. We're also at a funny time of year, everybody. You got typically lower volume as you're getting ready for Labor Day. People are still on vacations, blah, blah. Keep that in the back of your mind. The Aussie dollar. Look at the sideways action of the Bollinger Band. So the market comes up, gets up to it, and falters immediately. Also overbought. I see this market like in a spiral here, or let's call it a pipe, and it's a spring winding itself up for an eventual move that it hasn't yet made. In the Japanese yen, the market got its typical run-to-me safe haven play off North Korea, goes right up to the Bollinger top and collapses from the highs. Gets up as high as 92.44.5, and all of a sudden pulls back to 91.06.5. So if you don't understand the theory of Bollinger Bands and you just hung in hoping the market was going to come back for you, you got yourself into a big bind. Also, the one thing you may not agree with, but the one thing I espouse, is if you're buying Bollinger Bands, look at what's happening to you. And you don't think you can enter the market in a better way? Maybe you can't. I don't know. That's up to you, not me. What I see on this chart now is the market's last break low right here was 91.12. Now we've gotten to 91.06.5. This market has lost its uptrend. It's trendless. It's against the 18-day average of closes. Momentum's trying to point down, and that's all that I can really say about it. In the crude oil market, the market is trying to find support against the lower Bollinger Band. That doesn't mean you can't work lower against that number. The trend is clearly down. You got the lower highs, lower lows. You had a bearish crossover right here where the 18-day got under the 100, and you've made the new lows. That doesn't mean you can't go lower. That's not reason to get long, though. There's nothing here to get long off of. There might be reasons to cover shorts. You're oversold against the lower Bollinger Band. You might be able to do better elsewhere. That's up to you. The gasoline, how many days now? 2 days, if it settled like this today, of up and over the upper Bollinger Band. Let's go to this day. I forgot how it settled. The settlement price was 157.13, and it looks like that's about where the market was. So day one was closing over it today with an outside day to the upside, getting follow through to the higher high. All you don't want to see is taking out that low. And I think you realize that what's going on in gasoline is the event of a lifetime with this Hurricane Harvey that is setting up gasoline prices because the refineries have been shut in. When they come back online, I wish I could tell you when, you'll get gasoline supplies flowing again. In the meantime, I understand the bid. Natural gas, I don't understand the bid. The market's trying to work its way lower. But there is an event you got to start paying attention to. There's already a 10-day forecast that in a lot of the country, the growing regions, they're talking an early frost. And that could happen September 7th to the 9th in some of the forecasts. That would give you some demand temporarily for that gas. So just pay attention to the weather. Always pay attention to the first frost. Now, one of the ways I do it is with our research. You know, I'm not in front of a computer 24 hours a day, but we've made our QT Market Center work on your PCs and on your phones. And this app for your phone, it's free, number one. Number two, it works on both Android, iOS systems. It does charting. It can do order entry if you decide to have an account with us. It'll give you all the trades that you have done. You can break your news down to the different categories. You can look at quotes in many different ways. High, low, last net change. You can watch my videos. My commentaries are all through here as well. So if you're interested in something in your pocket, a great way to keep up, including weather built for the commodity markets. In other words, we don't just pick up maps somewhere. We're picking up maps that relate to the commodity markets. Well, then you've come to the right place. How do you get it? And it is free to give it a try. Give us a call. Go to our website. You'll see a carousel of free offers. Click up here if you're watching me on YouTube or underneath us. At any point in time, it'll say click here on a number of websites for Ira's free offers. Do so. We'll get this in your hands. I'm Ira Epstein. You have a great evening. I'll see you all tomorrow.